someone who loves to give a bit of advice out. I just found out too that Rob Murdoch, is anyone on Rob Murdoch's email list out that he does? Any of you in this room? All right, well, I'll let Rob tell you all about it when he gets in, because he loves to talk about it, but he always has some great observations to make, but apparently he has private luncheons. Were you aware of that? No, so you and I are both on different lists. Look at him, he's on his phone already. Hold on a second, just wander over here. Jardee, there's no one here yet, so let's just keep the time until we're... What are you doing, Steph?
What am I doing?
Hey, what are you doing on your phone?
Sending a note.
Who are you sending a note to?
I want to be here, not somewhere else.
Oh, that's gorgeous. I like that. So you're sending an excuse note. What's your excuse for not leaving here and not leaving this man up here?
I want to see Joe.
Yeah, fair call. All right, that's fair call. Now, you four at this table here too, can you keep your voices down this break? Because whatever you're discussing, it's bloody interesting, but keep your voices down, okay? I'm going to have to come and rap you on the knuckles. You are the most excited investors that we have in this room. We appreciate it, but be quiet. All right, so while it may be a small and intimate gathering, the nice thing is that people get to read the program, and this is definitely a targeted audience. So you always have to think about the opportunity that way. So let's open up here. We are talking Future Metals, and they're progressing towards development with their existing high-grade platinum, palladium and nickel deposit, which is in the Panton project. And they're also exploring in the highly prospective East Kimberley region for the next big nickel copper sulfide discovery. Jardee is their managing director, and he's going to give us an update. I just absolutely devalued my speech then, didn't I? He is going to give us an update on their prospects. Would you please make him very welcome, everyone?
Thanks for the intro, Chrissy, and thanks for everyone showing up after lunch. It's a great time to be getting the story out in front of you. We are heading into a pivotal quarter for the company. I think we're the only platinum group metals company presenting here today. And so I'll be referring to it as PGMs from here on in. What we're doing is progressing a scoping study on what is the highest grade PGM deposit in Australia and one of the highest grade PGM deposits, undeveloped PGM deposits globally. And that scoping study is shaping up to show that we will have a long life, high grade operation, low capital up front, and certainly show strong margins across a range of price assumptions there. And you know, obviously that grade affords us the ability to progress a low capital operation, but certainly the location as well. We are 1 kilometre off the Great Northern Highway. We're 350 kilometres from the deep water port at Wyndham. We're near the two main towns in the East Kimberley of Halls Creek and Kununurra for labour and contracting suppliers. And there's also a sealed airstrip at Halls Creek. So you know, we're in a good part of the world. It's remote, but not too remote, and so there's a lot of infrastructure that we don't have to build into our development. I guess the thing about PGMs is that the flow sheet it does take a bit of development. Fortunately, we've got 20 years of work behind us to get to the point where we have a highly economic flow sheet where we are getting every single dollar that we can out of that ore that we're bringing out of the ground. The linchpin for all that is producing a high grade saleable concentrate. So we're able to achieve recoveries in line with what they're achieving in the Bushveld, which is the major PGM supply hub over in South Africa, at very high concentrate grades. And that gives us optionality. It gives us optionality to sell it to the traders or the smelters as a bulk nickel PGM con for blending, or it gives us optionality to go downstream with a very small hydromet facility afforded by that high grade concentrate that we have. Part of that, we expect those recoveries to improve as well. We've recently done a massive trawl through historical data from test work on our product and prior work of conventional cyanide leaching on the tails has shown very strong recoveries, and we've engaged in those tests ourselves and are looking to announce on that in the short term when we get those results back. And again, just touching on the downstream, we've already had plenty of test work done across multiple technologies on the downstream side. and they show 99% recoveries on the metals that matter, being platinum, palladium, and nickel there. And last of all, as I say, we're trying to squeeze all of the revenue we can out of those ore tons we bring out of the ground. So we're also showing that we can produce a saleable chromite concentrate from the tailings out of that concentrator. So we are progressing a scoping study, but it's a scoping study that's on the back of in a lot of ways, a BFS level of work. And that includes the existing decline that we have at site. So there's about 450 meters of development there. And that allows us to potentially look at reopening that decline, going down there and taking a bulk ore sample and testing that flow sheet from start to finish at a demonstration level, which allows us to progress that scoping study through to a bankable feasibility study much faster than any other undeveloped PGM project out there. So we have all of that behind us, or to come potentially. And then we also, we're sitting on granted mining leases as well. And so the replacement value of that decline, of all the prior drilling prior to Future Metals acquiring the asset, is in excess of $30 million, which is well above where we're trading at the moment. So I think it's a pretty compelling story if I kind of stop there and walk through the project in a bit more detail. But what we're also doing is progressing a very prospective nickel sulfide exploration model. We didn't want to stop with just what we had. We trawled through the raft of data that we picked up from acquiring the project through the previous owners. And what it showed is that this is highly prospective ground for making a nickel sulfide discovery outside of and near that existing high-grade PGM reef, and that's quite a new concept for the area. It's always just been considered a PGM reef, but we've brought a new lens to it. We've got an expert in the field, John Hronsky, to help us with our exploration model, and I think we're shaping up to make a discovery there as well. And we are drilling, doing our first phase of drilling for the dry season currently as we speak. So we have a strong board. We have prior PGM experience out of South Africa in Alan. Alan's also been across the project in a previous life at Panton, and so is Rob Mosig. And then Justin Tremaine's a proven company builder and operator there as well. And then the management team is the kind of dynamic management team you want for progressing forward a project in the PGM field, in the development space, but also that nickel sulfide exploration. So we really do have all bases covered there. So the core use case for PGMs, which I'm sure not everyone is aware of, is really in the automotive sector. So typically they're using catalytic converters for your cars, and that's going to continue to be the main source of demand moving forward. But that's going to broaden, particularly as fuel cell EVs become more prevalent, and also as hybrids take a broader penetration of the market too. So platinum's used at much greater intensities in fuel cell EVs than it is in combustion engine vehicles. So it is a strong growth market moving forward, and certainly there's a wave of capital going into that market out of the Inflation Reduction Act from the US, but also the EU Green Industrial Plan. So we expect that to drive significant growth for platinum and palladium in that market. And certainly, the CEOs of the big auto manufacturers agree with that statement. It's going to be a multi-pronged approach to drive this clean energy transition in the personal mobility space. So there's a lot of demand to come from the hybrids and the fuel cell EV space. And this is at a time, to add to that, the year-on-year growth as at May for platinum was 28%, and supply is down circa 1%. And that's because it is a very concentrated sector or industry, and it's concentrated in some fairly challenged investment jurisdictions. 80% of the world's platinum palladium comes from South Africa and Russia. The majority of Russia's supply now goes through China, as Western customers won't take it. And that really leaves you with South Africa. They recently came out of a state of emergency due to the rolling blackouts that are occurring there. And certainly a couple of months ago, you had the big PGM producers such as Sibanye and Anglo stating that the operating conditions there are getting untenable. And it's hard to justify an investment case for putting more capital into the country and into their mines, which are getting deeper and more expensive to run. So I think we're certainly not at the incentive price for PGMs, and that's going to start flowing through the second half of this year. And that's certainly a statement being made by some of the analysts at the big investment banks. I know Bank of America has a price forecast for platinum of $1,500 an ounce, which is a 50% improvement on where it is today. And I think we're certainly great leverage to that. The other point to note here is that PGMs are very scarce. They're much more rare than gold, rare earths, lithium, copper. You're not seeing discoveries of significant PGM assets every other week. And so that makes what we have very hard to replace, being the highest grade deposit in Australia. Obviously a top tier jurisdiction when compared to to Russia and South Africa. So just to touch on the location again, we are 1 kilometre off the Great Northern Highway, which is the main transport artery up there. 2 major centres quite close by in Halls Creek and Kununurra, Deepwater Port up at Wyndham, sealed airstrip 70 k's south at Halls Creek. As we look to potentially create a downstream integrated project, there is potential to build that hydromet facility at Kununurra or Wyndham, which are running off cheap zero emission hydropower energy there as well. So this is just an overview of the resource. We are currently remodeling that resource and looking to come out with a new resource end of July. It is very laterally extensive, extends down to a significant depth as well. So it has been drilled across a 5 kilometre strike. Its deepest intercept is circa 800 metres. In January, we had a step out hole around about here. It was about a 300 metre step out. And that intersected further high-grade mineralisation, which is shown to be flattening as it plunges to the southwest. And then that high-grade mineralisation is also surrounded by a lower-grade disseminated style that is quite nickel-rich. So we have growth potential in terms of starting with a high-grade underground low-capital project and then expanding further down the track once there's a proof of case in that operation. So the game plan here is, as I described, underground mining, reporting that underground ore to an ore sorter, upgrading that product through the ore sorter. We've done a bulk met test, a bulk test on the ore sorting back in January, which shows 97% recoveries of the high grade ore from the lower grade and waste. So that allows us to right size that plant, minimize capital, and make sure that we're pushing tons that have ounces through there and throwing that OPEX at the material that's highly economic. And then at the concentrator stage, there's obviously a grind, a float, and then we produce a high grade PGM con with a high grade nickel PGM con. Potentially stop there, as I say, and sell that into the trading or smelting market. You also produce a chromite concentrate, similarly selling that into the smelting, the ferrochrome market. Alternatively, we build a fairly capex light hydromet facility, and that allows us to upgrade that concentrate and get much higher payabilities through producing a refined metals, a suite of refined metals products. It also allows us to differentiate ourselves from the Russian and South African producers, which are using the CO2 and SO2 intensive smelting technology run off thermal coal. This is just to drive home the maturity of the asset and of the project. We do have the ability, under the right market conditions, to accelerate through the study phase into the construction and production phase. Given that we have, we are sitting on granted mining leases, we do have an existing decline there to support bulk met test work, and we do have a bevy of work behind us from a previous bankability study done on the project and all the other prior work. So the other leg to the company and how we're aiming to grow value is certainly in the exploration model. So, pardon me. So when we acquired the asset, we knew Panton's a very well-known high-grade PGM reef, but we wanted to test whether there was more at play. So we got John involved. His view was certainly that this is a highly active region with great potential to have a deposit similar to Savannah, which is a high-grade nickel copper deposit up the road. Certainly, we've seen in our recent drilling that the system has been subject to multiple magma flows at differing times. And so we're making calculated bets in terms of exploration while we progress that scoping study on the PGMs. So this is the kind of mineralization that we see. This is very different from what we're seeing in the reef. So you're getting 4 meters at 1.2% nickel, 1% copper, and 2 grams gold. That's the goal in terms of these exploration holes that we're drilling, is to get a broad intercept of that, because that's certainly going to be a game changer for the project and highly complementary to what we're doing there. So the news flow that's coming up is drilling, drill results through July, August, new resource towards the end of July. We'll wrap our mine designs and process designs around that and deliver on a scoping study in early Q4. And we have ongoing flow sheet optimization and variability test work underway at the same time. We're also progressing partnership discussions, which we'll be looking to formalise through the second half of this year as well. So plenty of catalysts coming up. And so what I'd want to leave you with is that there is, as I say, a host of catalysts coming up in an environment where we're expecting a significant increase in the main commodities that support that we will be mining, being the platinum and palladium price. So if everything goes to plan, we'll have a highly economic scoping study come out early Q4. Hopefully we get a sniff of a discovery in the drilling, and then there's a material price improvement in the platinum and palladium space there as well.
Thank you, Jardee. I'm sorry to rob you of your last couple of slides there, but if you want to go and have a chat with him, make sure you catch him before he leaves today. They can always ring you too, can't they?
Sorry?
They can always ring you and have a chat, can't they?
Absolutely.
Right, but go and find him as well out there. Thank you so much. And a big one to take on after lunch on the final day too. So it was a good spot, and I'm glad that you all came in to hear that one. Right, our next speaker, Julian Woodcock. Please make your way to the stage, please, sir. He's the Managing Director of Viking Mines. Now, Viking Mines is a battery metals explorer with a focus on the critical mineral vanadium. Look, if Jet was here, he'd be impressed with that right now. Boys, what are we chatting about? Sorry is right. Hold on a second. Let's come down here. I'm not eating into your spot, Julian. It's okay. I haven't pressed the buzzer yet. Did you like something that was just said then?
I'm just trying to organise my way out of here, way home. That's all.
I'll be putting you in something in a box way home very soon if you're not very careful. Right, I have to sit next to you and be quiet. Right. So we're talking about Viking Mines, okay? So Viking, well, I've lost my little doobalacca here. In fact, I've just completely removed you altogether while I've come across here. So Viking Mines, as I said, it's a battery metals explorer. Okay, so they're looking for vanadium, and they're making significant developments on their flagship Canegrass project, and that is located over in Western Australia in the Murchison region. So can you put your hands together, please, and welcome the very patient Julian Woodcock.
Thank you very much for the introduction. As said, I'm here to talk about Viking Mines and the investment opportunity which it presents. Our usual disclaimer slide, you can read through that at your leisure. So really, firstly, I just want to start off with the investment highlights that Viking presents for you to look at getting on board. As mentioned, we're focusing on the critical mineral vanadium. Vanadium has been recently listed as critical mineral in many jurisdictions, and that's because of its primary use in steel, but among other things, and I'll talk to shortly, is within the battery sector. We also have within the project copper, nickel, and cobalt credits, and I'll touch briefly on another project which we have, which has gold and lithium potential. One of the main things is we've got a large mineral resource estimate from which to build from, and we recently completed a large exploration target estimate as well. This is giving us a range of over 1.1 billion pounds of vanadium in the current resource, and when we add in the exploration target upper limit, takes us to over 5.3 billion pounds. Now, at $10 a pound Australian at the moment, that's huge inherent value, which we're seeking to release. We're not the first people to be doing this in the region that we're exploring. There's a couple other companies that I'll refer to a few times later on as well, Australian Vanadium and Technology Metals. Both of those companies have advanced projects through to feasibility study and beyond, and demonstrated positive economic studies, which is what we're hoping to emulate. Myself and the other board members have demonstrated discovery experience. I've been involved in a number of significant gold discoveries and advancing some copper projects as well as others, and other members of our board have been involved in many other projects. So just to give you a quick snapshot of Viking, we're probably one of the cheapest options for entry into the vanadium sector, and I'll demonstrate why now is a great time to be able to get on board. Our share price is trading just below a cent. We've got 1 billion shares on issue, giving us a market cap of 9.2 million. We had cash at the end of the last quarter of 4.35 million. An additional component to add to this is, without going into too much detail now, because it's been running a while, but the company used to have a gold project in Ghana, which we sold in 2015. We've been taking, the purchasers didn't pay the full price at the time. We've been taking them through litigation. At the beginning of this year, we received a High Court ruling confirming that they had to make their final payments. With that, we received another $1 million just at the end of the last quarter, and we've still got 3 million Australian dollars due to come, which we're confident we'll receive. With that, that'll give us a cash position north of 7 million, which puts the enterprise value for this project at sub 3 million. And what I'm going to show you will demonstrate why that value is severely understated and that the investment case for getting on board. In terms of our registry, we're tightly held with the top 20 reporting over 50%. When you take into account some of the other holdings that those entities have that are below the top 20, it's really nearer to 60%. Myself and other board members have over 3%, so we've got skin in the game as well. I'll just quickly refer to our board members. Michael Cox is here with me. He's at the back of the room. Michael's got an extensive experience in legal accounting and has also a geological background. Myself, as I mentioned, as a geologist, strong technical experience. And Charles Thomas, our chairman, he's been involved in the finance industry, brokerage, and runs a boutique firm involved in placements, IPOs, raises, and he's also involved with and director of a number of other ASX listed companies. Between us, we've got a wide breadth and depth of experience. So to move on to the project, first and foremost, we're in a tier 1 jurisdiction. My slide here is a little bit out of date. WA has slipped down to number 2 in the world ranking index on the Fraser Institute's annual survey. However, it's still one of the best jurisdictions to operate in the world. We're situated in the vanadium triangle of hard rock projects, which I'll cover off on a bit later. And we're part of the Windermere Igneous Complex, which is the same as the Bushveld Complex, which has been known for a lot of vanadium production over time, but as well as other projects such as PGEs that we just heard about. The location is very good. We're 620 kilometres from Perth by sealed highway to within 22 kilometres of the project and only 45 minutes just outside the township of Mount Magnet. Mount Magnet's a big mining hub with gold mining operations running there, as well as sealed airstrip for easy access. One of the key pieces of infrastructure that runs nearby to the project is a gas pipeline. So should we move this project forward and look at the investment decision, we'll have immediate access to gas, which will be able to power the project. Port and rail is due west with the city of Geraldton. The railhead being slightly closer, about 400 kilometres away. I always find when I speak to people about this project, the first 5 minutes can be dictated by on what their knowledge of vanadium is. So there is a bit of work to be done in educating and informing people as to the use of vanadium. So I'll touch on this briefly now, but I think QEM gave a great overview this morning at their talk. Essentially, the primary use of vanadium at the moment is in the steel sector. And I'll say at the moment, 90% of the vanadium consumption of the world production goes into the steel industry, and that's in building regulations and codes that are in the steel that's used into rebar and the like, and it provides high strength. However, it's also the main component in vanadium redox flow batteries. This battery technology has significant opportunities, is now commercial and getting installed globally, and seeing up to 10% of this year's consumption going in from the year's annual production going into the batteries. There's other future innovative technologies as well, such as a company called TIFAST and MK Plus that are researching the replacement of the carbon cathode within batteries, standard solid cell batteries, with a vanadium cathode. This has a result of being able to fast charge batteries in a matter of minutes as opposed to the longer times that we see at the moment. Most of the production comes from China and Russia, which is dominating world supply, and I think many people have talked about concerns over these sources. And there's a huge opportunity for our project and Australia to move and develop in the vanadium space, which at the moment there is no annual production of vanadium coming out of this country. Just to touch a bit more on the battery space, the graph on the right here shows us the forecast production, the increase in vanadium going into the battery sector over the next decade, increasing over 9-fold. Vanadium redox flow batteries provide a large energy storage solution. There's a pilot plant project that's been established in China and came online last year that provides 100 megawatts of power with 400 megawatt hours. And this is being scaled up to 200 megawatts and 800 megawatt hours in the future. It's these kind of installations that are container sized, could power remote communities, remote mine sites, even buildings like the one we're in with solar panels on the roof and a battery in the basement. The advantage of these batteries over lithium is that they suffer no degradation over their lifetime. They can constantly be recharged and discharged and still have the same capacity as when they were first produced. They're safe, there's no fire risk, it's a liquid battery, it's electrolyte, and the capacity of the battery can be readily increased just by increasing the amount of electrolyte that you have available in the system. And at the end of the battery life, the vanadium is fully recyclable and can be taken out, put into another battery or repurposed. Now I've set the scene for our project, I will expand a bit more on it. The Canegrass Battery Minerals project has a substantial existing resource of nearly 80 million tonnes, 0.64% vanadium pentoxide, giving over £1 billion of vanadium. Just looking up on the right side of this image, this is the area within which the vanadium is contained, and the current resource just sits within the 2 green areas outlined. We've identified through field mapping and geological work we've done this year that it continues between the 2, and through the work that has culminated into producing this exploration target estimate. We've got 144 to 192 million tonnes at a range of 0.45 to 0.99 being the target which we're seeking. This gives us a huge range of vanadium contained within 1.4 to 4.2 billion pounds of contained vanadium. We're seeing rapid advancement of the project. We acquired this in December last year. I'll talk through a slide a bit later on what we've achieved, but the essentially key component at the moment is a major drill program underway, which is shown by all the white triangles on the map. We're completing over 6,000 meters of drilling with the intent of trying to define key areas for moving forwards. The objective of this drill program is to define a resource greater than 30 million tonnes at 0.9%. Now that's under the resource we have at the moment, and what we're seeking is actually a high-grade component within that. The expectation from the drill program is we'll see a substantially larger base resource, but defining that 30 million tonnes greater than 0.9% is based on what we've seen other peer companies achieve and deliver positive economic studies. So we're going to drill test a series of those targets. We're going to extend the current mineral resource estimate into other areas. We're going to grow high-grade vanadium horizons that have already been identified, and we expect to discover new ones as well with the drilling. On the back of this work, we'll deliver a mineral resource update towards the end of the year, which will see the resource grow. We'll also complete some further extensive metallurgical test work with the objective of determining whether to commence with a scoping study at the start of next year. The next few slides. There we go. The next few slides, we'll talk through some of the areas that we're targeting. So this is the fold nose area, which is in the south part of the project. There's an existing substantial resource here with an extensive opportunity to extend it. At the start of the year, when I went to the project, I visited the outcrop at the corner of the resource here. That's the limits of the resource, and walked following the outcrop for 1.4 kilometers. I immediately wondered, well, why is this not included in the resource? And that became apparent with further work that essentially there'd been no drilling undertaken. So again, part of our drill program is drilling in this area, which will see an extension of the resource. And importantly, to the south, again, the resource hasn't been brought up to surface, but mapping has identified outcrop all running along the south. So the drilling program we've got underway will see the resource extend to surface, provide shallow potential open pit tons, and we'll see the resource grow. Importantly, we can see in the historical drilling grades of 18 meters at 1.17, 40 meters at 0.8, including 8 at 1%. Now, these are the grades that we expect will deliver that substantial base case that we want to build from, which is the 30 million tons. But it doesn't stop there. So we move 5 kilometers to the northeast, and we have the Kinks deposit, which also hosts about 20 million tons at 0.57%. I want to draw your attention to the results. Draw your attention to the results that are highlighted in the boxes here. This is drilling that was completed since the last resource update, is not included in the resource estimate, and has the potential to substantially increase the resource further. Moving on to what I think is the most exciting target is Kink South, down in this area here. This is an aerial view looking to the west. We've got substantial outcrop occurring at surface here, which we can trace on surface, and then it re-emerges over this side under this drainage. And there was a series of old holes that were drilled in the 1980s and no further work undertaken for 40 years. In some of those holes, we're seeing results as high as 28 meters at 0.9%, 20 meters at 1.1, pretty much from surface. We drilled one hole back in March as a bit of an initial test, and we intersected 2 zones, 19 at 0.6, and the better zone, 17 at almost 1%. This is what we believe could actually even produce that base target tonnage of 30 million tons in its own right. The drill holes here, the the white triangles. We've completed that drilling in the last couple of weeks. We're going through the logging. I expect to be able to provide some news flow shortly on what we've seen, and we should see the assay results come out in the next month. But I hold high hopes for this area that this could alone deliver a 1% target grade. It doesn't stop there with the vanadium. I haven't even talked about the iron. This is all hosted in magnetite, so there's opportunity for iron, and some of the original exploration here was actually conducted for the iron. But we've also got nickel, copper, and cobalt that we've seen in the drilling completed to date. I won't run through the numbers all there, but the recent hole that we drilled did yield 17 meters at almost 1,280 ppm copper. In their own right, these are low numbers and wouldn't make a mine on their own, but in the vanadium process, the way you extract the vanadium is you use a magnetic concentrator, remove all the magnetic minerals, and that's where the vanadium reports to. The non-magnetic minerals is where all the sulfides go. And we've seen in the peer company projects in the Murchison that they run these through a flotation test work, and then they, on that flotation, produce a sulfide concentrate. So we're going to undertake that activity ourselves. Just to highlight here why we target that 30 million tonnes. This is a map of the peer companies in the region. We're the westernmost projects closest to port. The companies that have completed their studies to definitive feasibility study and BFS are seeing those 30.1 to 45 million tonnes in their economic projects, or they're demonstrated that they're economic, which is why we've got that hurdle. I encourage you to have a look at those companies because the market cap of those companies are substantially greater than that of Viking, which is where I believe that we can end up with completing the activity that we're now moving forwards with. On the work that we've completed this year, all the items in green is what we've undertaken. We've done geological mapping, rock chip sampling, geophysical surveys, reinterpreted the structural geology, completed an estimate, undertaken some preliminary drilling, and commenced some metallurgical test work. That's more activity on this project in 6 months than has been completed in a decade. And it doesn't stop there. We've got the drill rig out at the moment. We're completing 6,000 meters to test across the area. We'll see the assay results come back in the next couple of months, along with the metallurgical test work, which in turn will allow us to make a resource update at the end of the year and then look to move into scoping. A quick slide on our other opportunity within our portfolio. So we have up to a couple hundred kilometers north of Kalgoorlie, the first hit project. The main highlight to take away from here, it's a high-grade gold project, but there's a lot of lithium potential in the region. Delta Lithium have defined a 12 million tonne resource with 1.2% lithium. We've got a whole number of pegmatites on our tenure, and we've actually encountered some lepidolite as an indicator of potential for lithium in the region. We'll be looking to undertake some activity on this possibly later in this year. I'm conscious you're getting closer, and I'm just moving to my last slide. So here is the investment case. You get exposure to the critical mineral vanadium with copper, nickel, and cobalt credits. Never mind the lithium and gold opportunity with our other project. We've got an existing large mineral resource, which has got demonstrated potential to grow substantially and critically with the high-grade component. We're advancing the project rapidly. We've undertaken a massive amount of work and are continuing to do so. And importantly for you as investors, the market cap is currently low, probably one of the cheapest entries into the vanadium space. And it's typically at this part in a project's life where you see rapid acceleration and rapid growth. Is Chris getting closer? I think I'll wind it up there. Thank you very much for your time.
Thank you very much. Do you know where Vanaheim is?
Where what is?
Vanaheim.
Vanaheim. No, it sounds German.
It's Norse. It's a Norse. It's where all the Norse Vanadair gods used to live. And Vanaheim is where all the weather gods live. And the most beautiful Norse god that lived in Vanaheim. And people didn't know where Vanaheim was and didn't really know what it looked like either. Are you starting to see the correlation somewhere?
Yeah.
So Vanadia was the most beautiful of the gods from Vanaheim and also the strongest. So she was lusty, but she was also the strongest one. They'd send her out for war. And that's who vanadium is named after.
You should come and work on our IR team.
Yeah, I know. I don't do the technical stuff. I just do the story bits to hang it in. Thank you so much for that. Would you please put your hands together for the big fella, Mr. Woodcock. James Farrell, Executive Director and CEO of Kingfisher Mining. He's coming from the back. The man's got a lot of stamina, I can tell you that, because when he's not, he likes to go out smashing his mountain bike on the trail. So he's fit, this fella. He's also found that if he's not doing that, out exploring in the Gascoyne, which is his favourite place to be. He is an exploration and resource development geologist. He's got the odd 20 years of experience behind him in Australia, Asia, all over the place, really, Africa. He's got significant experience with project generation, Do you want me to keep going?
Oh,
Multidisciplinary. I
please.
could keep going forever, but you've only got 15 minutes. At the moment today, what is really pumped to share with all of us is the massive Mickwell Rare Earths project that he is currently growing when he's not out mountain biking. Would you please make him welcome, everyone?
Thank you for that introduction. That's pretty exceptional there. And look, thank you everyone for staying this afternoon and sitting in. There's still a very good crowd here in the room. And thanks for those tuning in online. There's a video session running. So greetings to those people that are there. Kingfisher Mining. So there's a few key takeaways I want everyone to have. Rare earth element discovery, Gascoyne. So Gascoyne hot. Experienced team, large scale. And I think these are really the things that we'll see Kingfisher drive off into the future and what to look out for as we progress as a company. Hopefully that worked. There we go. Lovely. So what we have here, disclaimers, standard stuff, but also the important things on this slide are our contact details. So you can reach out to us at those email addresses there. And also all of the sources of information, all of the ASX announcements that go into this presentation are all listed there as well. So this presentation was uploaded to the ASX today. So if you want additional information, please come and see me in the booth afterwards, or visit any of those links that are there in this upload today. So why Kingfisher? Let's get back to those advantages. So as I mentioned, we have a high grade breakthrough rare earth element discovery in the Gascoyne. We've got an exceptional tenement holding. It's nearly 1,000 square kilometres. We were a first mover. We had the opportunity to take up a lot of ground at the time in the early days when we first set up and we started operating in the Gascoyne. This ground's highly prospective. We made a discovery. It was a breakthrough. This mineralisation wasn't known in the area before us. And now, it is highly prospective. And we think our strategy is value building, and that's, a great opportunity for people to get on board with the company and support us, as well as we've got an experienced team, a team that's taken projects before from discovery through to operations. So I think that's really fundamentally what you can rely upon as an outcome in the future for Kingfisher. We have these foundations where we can really build value for the company and for shareholders. So our corporate snapshot here. We're not an old company. We only came onto market 2.5 years ago. So low shares on issue, less than 54 million shares on issue. Market cap is currently in the order of about 15 million. So, it's a lot of upside there, I suppose. And we've got cash in the bank. We've got $3.9 million as of the end of the March quarter. So that there's been, carefully thought about in terms of our budgets for it. And as we, we're really looking at a value building strategy to progress and advance the company. So that's a decent amount of cash for us. Looking at our shareholding, so the board has nearly 10%, includes me. We're highly engaged as a team. And our top 20 shareholders are very stable. So a lot of what the trading in the company is outside of, I guess, that group of top 20. So looking to our board, we have Warren Hallam, a fairly well-known mining executive, Scott Hufferdine, a geologist like myself. And as I mentioned before, this is an experienced team. It's a team that is hands-on, the sleeves are rolled up, and they're really committed with me to driving the strategy and driving the company forward. So it is a very dependable and experienced team. So rare earth elements, I guess over the last couple of days, people have heard a fair bit about rare earths and their uses and things like that. But just as a bit of a recap here, it's really all about permanent magnets for the rare earths that we're interested in, which is neodymium and praseodymium. So the use is really about electric vehicles and wind turbines. There are other uses for rare earths, of course, in this space, such as military and tech and space and things like that. But the key thing that's happening, and there has been some price volatility, but typically now prices for rare earths remain high. And there is very much a forecast supply shortfall. So, with supply of permanent magnets dominantly coming out of China, there is an interest in other parts of the world to see that other industries are, sort of developed, particularly out of the United States and things like that. So strong support for the rare earths, but we're also seeing in Australia with the Northern Development Funds and things like that, tipping money into critical minerals. And I think that for our developments here is pretty important. So looking to where we are, so that's us there in yellow. You can see at the bottom of the slide there. So, you know, large holding, as I mentioned before, we are a first mover, so that allowed us to take up a really decent position. And it's a great neighbourhood. We've got really good neighbours. Immediately to our north, we've got Minerals 260, which is of course backed by Tim Goyder. Some folks in the room might know Tim from Liontown or Chalice, a couple of amazing success stories there. North of Minerals 260's Delta. They got a bit of a shout out in the last presentation as well. I heard that's of course Dave Flanagan. They're very, very active drilling their lithium project there at Unithara. In the gap, about where that Delta logo sits, is a newly listed IPO. That's Brian Roden's Augustus Minerals. So, you know, another giant land holding for those guys there. And then it's Dreadnought. And of course, everybody knows the Dreadnought story. An outstanding success there with their Yin discovery, high-grade rare earths, and they've really just gone from strength to strength. So hats off to those guys. So to the Kingfisher story, as I mentioned, we are a fairly new company. We listed in December 2020, and right away with a new listing, it's pretty well go straight, go hard, go early. So we got into exploring for copper and gold. That's what we listed as, a copper and gold company. And like all good copper and gold companies, we thought, okay, we better do some airborne EM. And as of July of 2021, we got our first targets from the airborne EM, and we identified some really nice looking conductors in the Gascoyne. At that stage, I think some people might remember, there was still COVID lockdowns going on and things like that. We were locked down. So we had to wait a week before we could get onto site and have a look at what was actually the conductor on ground. But as soon as that lifted, it was pretty well 4 o'clock in the morning, the first morning of the lifting of the travel restrictions, and we were straight onto site. And unfortunately, we didn't find any outcropping rocks, but that didn't deter us. We decided, okay, we're going to drill it anyway. And we got the results from that drilling in early January of 2022, and that was it. We confirmed the discovery. It wasn't copper and gold, it was rare earths. We did have a disseminated cap of 30 metres of chalcopyrite, copper mineralisation, sitting on top of our rare earth mineralisation, but straight away with that first drill hole, you know, we really confirmed the thicknesses and grades of Hastings Yangibana deposit. So that was, you know, very, very exciting for us. And as we progressed across 2022, it was just go flat out with this discovery, build it out as much as possible. So beyond the Mickwell 2 discovery, we made new discoveries at Mickwell 7 and Mickwell 8, which are also hard rock, high grade, vein and dike style mineralisation associated with those carbonatites. And we also made a clay discovery, which we announced there in September of 2022. We realised, okay, we've got this large tenement holding, very large scale opportunity. So we flew some airborne radiometrics and magnetics, which are essentially the essential geophysics tools for discovery of this style of mineralisation. And we got the results of those surveys early this year, announced them, and what fell out of it essentially was some very, very large scale targets, and it sort of shifted our focus a little bit, which is now our current strategy in 2023. And this is that strategy explained basically. So what we're looking at is a carbonatite model. So you've got a mass of intrusion which comes in, and coming away from that intrusion mass is veins and dikes and things like that. So we found very, very high grade veins and dikes. And after we saw the geophysics, we saw the results of those surveys and did some interpretation, we realised pretty quickly that this is a massive opportunity. So we thought, well, let's invest our efforts in finding the really big prize. We can see signatures which look like that really big prize. So we thought, okay, let's get after that. And that's now what we're doing. So this is the tenement area in detail. And I mentioned it is a large scale strike. So across our main target zone, which is the Chowbar, we have a 54 kilometre target corridor. And, you know, by Queensland standards, I think that's most of the way to Brisbane from here. So it's enormous. It's a very long strike length of corridor, which we're finding mineralisation along its length. when we made the discovery, we then pegged a little bit more ground, obviously, a good explorer, straight into maximising the opportunity. So we took up more ground on the Lockyer, which together those two areas are 30 kilometres. So that gives us 84 kilometres of target strike of these structural corridors into which we believe the carbonatites are intruding. So, looking at that, that's most of the way from Coolangatta to Brisbane. It's an enormous length of target. Coming up, we're first going to look at Mickwell 2. So we'll look at in detail the vein and dike discovery, and then we'll move on and look at what comes up after that will be the large scale target, and particularly at Arthur River LK1 target, because that's one that we're particularly keen on, and we're in there at the moment on the ground working. So this is the Mickwell area, Mickwell 2. That was our first discovery. So what we can see there, essentially a series of veins and dikes, filling structures that are pretty close. So our discovery hole was hole 4, the 12 metres at just over 1%. And as we progressed, I mentioned we didn't find any outcrop there. We went there and had a good look. And it wasn't until June that we really found the outcrop associated with the rest of the vein and dike system at Mickwell 2, which was up in here. And we drilled that area late last year and announced the results in February of this year. And together what we can start seeing emerging there is rare earth results that have grades and thicknesses very like the Yangibana deposit of Hastings to our north. And that's something that's under development at the moment. So I'm not quite sure when that's scheduled to come into production now, but there is a phased development of that at the moment. As the year progressed, I mentioned we also found Mickwell 7 and Mickwell 8, so these areas up in here. And those areas are now drill ready. And it's part of an upcoming program that we have to kick off in about a month. All the clearances are ready, all of the work's been done. So ready to go. What we do see at Mickwell 7 is greater continuity and thickness of mineralisation than we've seen at Mickwell 2. So look, we're pretty excited to get in there and continue with the expanding the discovery there. At Mickwell, there's still more opportunities to expand away from what we know. So this is essentially showing a magnetics image with these features. Whoops. These features here, these magnetic features, we believe strongly are, additional strike extents of the mineralisation, which are sort of hidden amongst the rock and thin veneers of covers and things like that. So 6.5 kilometres of strike has been confirmed with rock chipping and with drilling, and we believe we can expand that beyond what we've currently got. Turning to our very large scale targets. So what was revealed when we did the work was really quite surprising. We thought, this area is interesting. We'd recognised already that there was a number of key pathfinder elements, if you like, or exploration for carbonatites in this area. There was phosphorus and there was elevated rare earths in stream samples and things like that. We've been in there mapping, we've identified the alteration phenites, which are associated with carbonatite intrusions. So an area that we're really, really excited about. Anything that has a circular feature like this is a couple of Ks across. So we get ring dikes that form around these intrusions. Again, another something that's really exciting for us when we see that sort of thing, together with these circular magnetic features. Now, getting those into perspective. So we're there, up to 800, 1,000 metres across. So very large features. And if we think about some of the great rare earth discoveries that are happening at the moment, like Lindian in Africa, like WA1's Looney, we're dealing with carbonatite intrusions of about that scale. So a lot to happen here. It is our #1 focus now. We are, as I mentioned, we are on ground and we are working there today. What can everybody expect from us this year? There's a lot happening, as I mentioned. We've got a drill program kicking off shortly. We've got another drill program scheduled for later in the year. That is going to be in the Arthur River area. We are flying more early stage generative work as well. So our North Chalba and our Mooloo projects have very little work on them. Again, we recognise the same sort of mineral system that we've seen everywhere else. So in our Chalba. So look, high priority for us to work on those areas. And a very busy back half of the year for Kingfisher. Back to our closeout, our final, we've got to do it quick. Here we go. So Kingfisher, breakthrough discovery, really, really large tenement holding in an exceptional part of Australia. Growth opportunity. It's highly prospective. We've got the geology, we've got value, and we've got the leadership team to do it. And we have me wound up. Thank you, everybody, for listening.
Well done. That's it. He's coming down the back straight. He's on the mountain bike. He's finishing up. Well done, lad. Okay.
Thanks, everybody.
Christopher Hansen, come and join us, please, sir. Greenstone Resources CEO and Managing Director, making his way through the room. You're not a mountain bike boy, are you? More refined. You'd be a road bike man in Lycra. No? Yeah. Now, Greenstone, let's talk Greenstone. So that is a gold exploration and development company. They've got new high-grade gold discoveries, and Chris is really looking forward to sharing with us this afternoon about the aggressive, very aggressive exploration that they are undertaking at their Burbanks Gold Project, as well as the company's developing portfolio of projects which are located across Western Australia. Please make him very welcome.
Thank you. Look, having sat through hundreds of these presentations myself, I think it's firstly important to provide a little bit of context in terms of what differentiates Greenstone and what makes Greenstone special. So why is Greenstone special when there are 755 ASX-listed mining companies, of which 175 of them are gold explorers and gold developers, but only 11 of those companies have high-grade undeveloped gold resources greater than 250,000 ounces, and only one is located within the epicenter of the West Australian gold industry, and that is our flagship Burbanks Gold Project. This is why Greenstone is special. Burbanks is located in the epicenter of the Australian gold industry, surrounded by a number of major and mid-tier gold miners and supported by a network of existing infrastructure. Drilling is currently underway at our Phillips Fine project, and we have an updated resource expected within the next 1 to 2 weeks at Burbanks, leveraging off over 10,000 metres of drilling that we completed just last month. Importantly, at Burbanks, less than 30% of this mineralised system has been explored down to a depth of 500 metres. Greenstone also holds a portfolio of other regional gold assets, as well as a 50% share in a large battery minerals project down in Norseman. All of our projects are located in the Goldfield region of WA. Our flagship Burbanks asset is located just a short 30-minute drive from Kalgoorlie. Historically, Burbanks has produced over 420,000 ounces at an astounding 10.9 grams from both underground and open pit production. Importantly, this historic production has been largely limited to the upper 140 metres. Until about 18 months ago, nobody had thought to stick a drill hole below 250 metres at this deposit. We have a current resource at Burbanks of 278,000 ounces and a resource update, as I mentioned, expected within the next 1 to 2 weeks. Phillips Fine is our second gold asset and is located just a short drive northwest of Coolgardie. And like Burbanks, has a very long history of shallow high-grade production, but still very much remains underexplored at depth. Historically, Phillips Fine has produced 33,000 ounces from 3 very shallow open pits, down to a maximum depth of around 75 metres below surface. We're currently drilling out here at Phillips Fine at the moment, testing both down dip extensions of known mineralisation and also a number of high priority regional targets within the wider exploration portfolio. Now, moving away from our gold portfolio, not to completely complicate the story, Greenstone also holds a 50% share in a large battery metals project called Mount Thirsty, which is located just north of Norseman in West Australia. Mount Thirsty holds a very large cobalt, nickel and manganese deposit, and we believe that this project is very uniquely positioned to provide a sustainable and long-term and ethical supply of cathode precursor to the growing EV and battery market, with the deposit containing all 3 of the necessary elements being cobalt, nickel and manganese to produce that cathode precursor product. 6 weeks ago at Mount Thirsty, we announced a materially larger resource, increasing by over 145%, which is now underpinning an updated scoping study, which is currently underway. As an aside, I'm a firm believer that base metals and precious metals very rarely belong in the same company. And it's our intention that scoping study will act as a catalyst for a future consolidation of that ownership structure and a subsequent IPO. Since resuming exploration at Burbanks 18 months ago, we've adopted a revised strategy very much focused on an aggressive exploration campaign and continued resource growth. At Burbanks, we've developed a track record of exploration success and resource additions, with the results to date very much exceeding our expectations here. I would now like to share with you that journey, where we started 18 months ago, where we are today, and where we see this project heading in the future. What we're looking at here is a geological long section. From left to right across the screen is a strike horizon of around 5.5 kilometers. 18 months ago, when we started here at Burbanks, all we had was a long history of very high grade but shallow production totaling 420,000 ounces and a relatively modest JORC resource of 140,000 ounces. Over the next 9 months, we then drilled over 10,000 meters of diamond and reverse circulation drilling, and we doubled that resource to close to 280,000 ounces. And importantly, we extended that known mineralized strike horizon by a further 2 kilometers. However, what we found is much of that drilling we completed was just too widely spaced for us to bring into a JORC compliant resource. So we leveraged off this wide space drilling, and we also announced a JORC compliant exploration target, which can be seen in the lighter green color here and has an upper range of 330,000 ounces. That blue box containing the vast majority of that exploration target was the focus of our recently completed phase 1 drill campaign. We finished that around 4 weeks ago now, and we've just moved into an updated resource, which we're expecting to announce to the market within the next 1 to 2 weeks. Some of the better intercepts that came out of that drill campaign were things like 5 meters at 30.5 grams per ton. And as you can very clearly see, these are not one-off isolated drill hits, and there's good continuity between those high-grade zones. This project very much has a track record of delivering continued ounces, and we believe we're only just getting started here with this system. Phases 2 and phases 3 have been designed to test the true geological potential of Burbanks down to a depth of around 500 meters below surface. Now, quickly moving to Phillips Find, our second gold asset in our portfolio. As per Burbanks, I'd just quickly like to share with you the past, the present, and the future on how we see this asset evolving. So again, we're looking at a geological long section. Across the screen from left to right is a strike horizon of around 1,200 meters. Historically, Phillips Find has produced around 33,000 ounces from 3 very shallow open pits, with the vast majority of that production actually coming from just the upper 50 meters. We subsequently leveraged off some very limited drilling we completed in 2022, as well as a number of historical drill holes in this area. And we declared an initial resource here of 54,000 ounces. However, the important change here is that we've very much adopted a whole system approach to exploration here, where we're not looking at each one of these open pits in isolation, but looking at this as an entire system with strong potential for a single underground operation in the future. Importantly, here at Phillips Find, only 40% of the mineralized strike horizon above 300 meters has been tested, and we've subsequently defined a drill campaign which is currently underway here at the moment, targeting those high-grade extensions you see behind me at depth. The historical drill intercepts at depth are impressive and include intercepts like 3 meters at 18.7 grams per ton and 2 meters at 14.8 grams per ton. With drilling now underway here at Phillips Find, we very much look forward to keeping the market updated over the coming weeks with those exploration results. Now for something completely different, here's our Mount Thirsty project. The Mount Thirsty project is a cobalt, nickel, and manganese deposit, which we hold in a joint venture with ASX-listed Conoco. And Mount Thirsty is very much focused on providing a long-term and ethical supply of battery minerals to support the decarbonisation of our economy. And I say ethical, as I don't think many people are aware that much of the world's cobalt supply comes from the Democratic Republic of Congo in Africa, which very much has a track record of supplying unethical cobalt, often produced utilising child labour, sometimes as young as 6 years old. Mount Thirsty, in our opinion, is uniquely positioned, containing cobalt, nickel, and manganese to provide a sustainable and ethical supply of cathode precursor. Previous studies here at Mount Thirsty had focused on the use of an alternative processing methods, which unfortunately resulted in lower metal recoveries, lower product payabilities, and depressed project economics. Over the past months, we've identified 3 principal project optimizations, which are now forming the basis of an updated scoping study, which is currently underway. The first of those optimizations for the updated scoping study includes a materially larger resource, which we announced just 6 weeks ago now, increasing by over 146%. The impact of this larger resource may mean a longer life of mine and a potential reduction in the stripping ratio. The second point on the larger resource is that Mount Thirsty actually hosts the second highest cobalt to nickel ratio for comparable Australian deposits. This is important as the updated scoping study is looking to produce what we call an 811 cathode precursor product, meaning 8 parts nickel, 1 part cobalt, and 1 part manganese. Our deposit, importantly, fits this ratio. The second major optimization for the Mount Thirsty project is improved recoveries through the adoption of the more conventional high-pressure acid leaching. Based on comparable projects, we believe that this will take nickel recoveries from, say, 22% to closer to 90%. Higher recoveries means more metal, and more metal may result in higher revenue. The test work underpinning this is currently underway, and we expect to provide an update to the market over the coming weeks. The final major optimization is the product that we're looking to produce from Mount Thirsty. 5 years ago, end users were happy to accept a lower value intermediary product known as MHP, and you can see there in the dark blue. However, with the rise of electric vehicles, the consumption habits of these consumers has changed, and they're now demanding higher value cathode precursor products. These precursor products attract a significant pricing premium, up to 50% higher than those other intermediary products. These higher payabilities may result in higher revenue for the project in the future. This cathode precursor test work is also currently underway as part of the updated scoping study. So as you might have guessed, we have plenty of news flow coming over the coming months, with continued gold assets from our Burbanks and our Phillips Fine project. The updated resource estimate for Burbanks is expected within the next 1 to 2 weeks, and continued updates for our scoping study, which we're expecting to release in late July, early August. Thank you all very much for your time today. And if you enjoyed today's presentation, please scan the QR code here to follow us on our social media channels. Thank you.
Thanks, Chris. And while you're doing that, oh, can you stick it back up just for 2 seconds, Shane? Would that be all right? Just so everyone can scan that QR code, please. Sorry, mate. Let's see if we can get that one up for you. While Shane is doing that, there you go. I was, a little jet that we had in here earlier on in the day, and I think he's taken off home now. I just was interested to see, how young you could be to get involved in the stock market, etc. And then I went down the Google channel of finding out who the youngest stock market investors were. There are some amazing examples there. There's a young guy, 2 young guys from America. One of them invested $650, his entire life savings, at an event like this he'd gone to with his dad. He's now worth $500 million. There was another young guy that started, he got involved, he was in a maths class and they taught him showed stock investing. So he started investing at 13, and by 19 he had his first $1 million. What are we all doing? How come we came to this party so late? I'm a little bit upset. A little bit upset by this. Do you remember Jerry Gannon that used to do the MC work for us at vertical events? Jerry, you would have met him over the years. Well, Jerry is very happily retired now, and the money that he's made from conferences like this, and he's gone back to Ireland to visit his family, and he's now wandering around the countryside, enjoying the life of a retiree with investment money coming in. So if you ever catch up with him on social media, tell him well done. Give us some more tips. How are you going? Would you like to come up here, sir? This is an interesting proposition for you, something a little bit different. The company is called Foresta, and they are actually the only company in the world with the capability and technical expertise to maximize the true value of pine forests. How? What is the value in doing so, and how are you going to do this? And should it be part of our investment strategy as some of us look for investments that perhaps tread a little more lightly on the earth? This is Ray Mountfort. He is the Managing Director of Foresta, also known as Leaf Resources. Yeah, and for the last 20 years, you've been involved in the biomass industry, haven't you? focusing on this, focusing on pine chemicals and working towards his vision of manufacturing renewable alternatives to fossil fuels. Would you make him welcome, please, and make him smile, because he's got something great to tell us. Welcome.
Thank you for that. Yeah, good afternoon. It's getting late in the day, so hopefully I can hold your attention. Yeah, just Foresta, New Zealand is a wholly owned subsidiary of Leaf Resources Australia, listed ASX LER. What we do is we utilise sustainable forestry. So our business, like just about every other business here, is raw materials driven. That's the strategic driver for the business. But our raw material is growing in the earth and absorbs the carbon out of the atmosphere, being pine trees. Why pine trees? Because they have some specific unique properties. And those properties include resins and fragrances. Probably everybody here would be wearing some sort of fragrance, deodorant, perfume or something like that. And more than likely, at least 50% more than likely, it would contain some pine fragrances that have been converted and put into it. Resins, we all know those with, for instance, this sticker on here, sellotape, stuff like that. You're either going to get it out of a pine tree as a C24 carbon, or you're going to get it out of the ground as an oil alternate. These are big existing markets. The pine chemicals market makes up around, at the raw material stage, what we're talking about, $10 billion a year is traded, restricted by really by supply. As I said earlier on, what drives this industry is supply. And that was the challenge that was put to us back in the day. The other most very important thing we do is what do you do once you've taken the chemicals out with the wood resource? And what we do is we make energy. We make wood pellets, and those wood pellets are then used as an energy source for mostly boilers for generating steam, many for generating electricity. That market's pretty substantial, about 50 million tonne a year currently, and growing, compounding around 5% per annum. And I think with some significant government policies that are kicking into place now around the world, that growth is going to accelerate. But of course, it needs to accelerate with planting of sustainable plantations to match it. So our market challenge, well, yeah, we are based in New Zealand. We're there for a reason. Talk about raw material supply. New Zealand has 1.6 million hectares of pine, generating about 30 million tonne a year of resource of logs on a sustainable basis. What that means is that when they chop down 1/30th of the forest, that's on a 30-year rotation, they replant 1/30th of the forest. That looks like about 25,000 last year. It was actually 55,000 hectares. So they're actually replanting at double the rate that they are logging in New Zealand. So the resource is growing. But what is interesting about what we've been working on over the last few years is that there's a part of the tree, 20%, that's not utilised at all, and that's the stump. But the stump has up to 10 times more chemicals in it than the rest of the tree, because the chemicals function is like a root, the roots, to give the tree flexibility so it doesn't fall over in cyclones and so forth. Interestingly enough, 4x2 manufacturers, forest owners, have been trying to breed resin out of the trees for the last 90 years. And we just saw the cyclone earlier this year where large swathes, 5,000 hectares of one forest that I know, were blown over and snapped like toothpicks. If you take away the resin, the tree loses its flexibility. So that's just an aside. But what you've got, market challenge in New Zealand, also is that there's a huge local market developed over and above the 50 million tonne of wood pellets that I talked about. And that market is that New Zealand government has outlawed coal use as a fuel from 2037. And so you have a situation where businesses, and there's thousands of them, are trying to, as we say, decarbonise. Wood pellets, sustainable wood-grown wood pellets, enable them to do that. And I think that's, that's obviously, it's that whole thing about don't leave, charity begins at home, don't leave till you've seen the country, that sort of thing. Those are old adverts actually from New Zealand days when I grew up there. Talk about the reduction in CO2. That speaks for itself. It's significant, but you know, it's not the key driver here. What makes these things happen is, can we make this profitably? Can we do this in a way that it makes a return for our investors? And the answer is yes, we can. But I'll talk about the size of the coal resource in New Zealand. New Zealand's a very small country. You know, we only consume 2 million tonne of coal. I know of one company alone in Taiwan that consumes 9 million tonne. You know, but 2 million tonne of coal makes up roughly 15% of New Zealand's entire carbon emissions. Now, we're talking about the stumps. There's 6 million tonne of stumps left in the ground in New Zealand every year. That's a significant resource. What is unique about our process? What's unique and what gives us our advantage? You know, making wood pellets, a lot of the green technologies are only viable if they're subsidised by governments at the moment. And I think for me that was a big challenge, because I genuinely believe that true sustainability in a business is you've got to be viable. And so what we set out to do was, how do we maximise the value out of the pine tree? Currently, 20 million tonne a year of pine trees out of New Zealand are exported as a whole log and shipped across the world somewhere else, where they grind them up and make something like pulp. Some of them make 4x2, some of them make ply, all those sort of products that we all know about. Very little manufacturing happening at home. And that in itself, there's a big cost there, cartage, shipping, so forth. What we do is we aligned these two key technologies, which is the stumps, get the chemicals out of the tree that are high value. Chemicals, typically your terpenes, and that can sell as high as, well, some of them as high as $11 US once they're refined. And that's $11,000 per tonne versus, you know, and then as low as $4,000 per tonne. But when you're comparing that to a $100 tree, you can see why I'm going for that value. That's your terpenes, your rosins. Trees, what we do, taking the wood, and we bring the logs in, we bring them in, we grind them up. We have to do that if we're going to make pellets or if we're going to take chemicals. We have to get that supply chain going if we're going to make pellets or if we're going to make chemicals. We're the only company that's just put those two technologies together, patented our extraction technology as well. And by doing that, we've given ourselves a competitive advantage, because basically we've got half the production costs of if we were making chemicals, and we've got half the production costs if we were making pellets. And that gives us really good margins. And as we saw it on those earlier slides, the aim is to roll this out not just across New Zealand, but across wherever we can source supply. And the beauty about our one is we don't have to go drilling for it. You know, everyone knows where the pine trees are. Most forests are registered. It's called FSC registration. So we grind those stumps up, we then solvent extract them. What we do with our extraction process, we don't add any other chemicals, which is again a differentiator from anybody else. What we do is we take the terpene, the smell of the pine tree, and we wash the tree in its own juices, because the function of that terps in the tree is to move the resin around the tree, and we want to remove the resin in the terps. So we just use the tree on its own self. Wash it out. We then distill that. We then have our two products. We then desolventize with steam by burning our waste wood, which is the bark and the leftovers of the feedstock. It makes a very nice, clean, circular process. Once we have desolventized, which is the solvent being the terps, taken the terpenes out, we then put the wood through compression and we have wood pellets. The next stage of what we'll be doing down in Rotorua, New Zealand, by the way, that site at Rotorua, New Zealand, is that we have there, it's 200 acres option, and that's all zoned high impact industry. It's right in the centre of 600,000 hectares of locally grown pine. A lot of that pine's now on a third rotation, meaning it's been grown for over 100 years. That's 30 years, refarmed, refarmed, refarmed. It's just called farming trees on a really large scale. So once we have gone through our process, we have that standardized chip, and then we make the wood pellets. What do we use it on? As I mentioned before, but it's probably in your mouth as well. Could be there as chewing gum. The people next to our stand are giving away chewing gum today. You can make it out of petroleum base. You can make it out of many things, but the true where it started from was taken from the pine tree as gum from a pine tree. A lot of road marking paints, high value, high adhesive anti-fouls on ships. Of course, sellotape. I remember getting in trouble 20 years ago when I was making this as an operator at a plant down in Mount Maunganui at a refinery. And the company sellotape made a complaint because we made the adhesive too clear and it started to look like 3M's white. They wanted the brown in there from the pine. Cosmetics, personal care, there's the flavorings and cleaning products. I mean, Pine Clean, we all know. Carvol for health, for breathing. You know, these are products that you're using every day in your life and consuming. That's why I like it. Grow it, use it. You need more of it. And that car tires, really big opportunity. We're making more tires around the world. The adhesive from that makes your rubber bond onto your steel can be made from petroleum base or it can be made from a pine base. Many of these companies want to green up. They want to be doing that. I used to make that for Goodyear 20 years ago. Obviously, yeah, soft drinks and sports drinks, Coca-Cola. It's a flotation agent. Basically what it does is the resin is in those drinks, Gatorades and those sort of things. Otherwise, you know, when you make your drinking, what's the flavors? Oh, oils, right? Like, that's what we call it, and that's what your terpenes are, like great oils. And so you want those to stay in suspension. So you use the rosin as a way of doing that and holding them in suspension. So it's used in many, many things. I know this is different to many of the businesses you've been looking at today, but I want, you know, why do we invest? We invest because we have an advantage. We invest because we think a company has an advantage. We at Foresta have got a great, I'm going to just jump that one, we've got a great team. And over this period, and you know, there's people on that team that have been with me for 23 years, because one's my daughter and she's 23. But there's also people on that team that have been with me from the start with 17 years, 7 years, 8 years, all the way through, and we're passionate about what we do. And what we've been building out that team this last 2 years in particular. Leaf Resources was a company that we did a backdoor listing on, and now we're strategically placing it as Foresta, and we want you to consider joining our journey and rolling out with us. Thanks.
Just about sounds too good to be true, doesn't it? Why aren't we dragging you out the front there and getting you to run up and down with this idea? The camera's not on me, so no one can hear. You've got a minute left of your talk. That is absolutely, I found that really fascinating. Anyone else? Yes? Good. Yeah, I thought that was, thank you very much for that. Great educational. Really, and I hope to hear more from you next year too, see how it's going. Paul Bennett, would you like to come up and join us, sir? Here he comes from the back. Paul is the Managing Director of Medallion Metals Ltd. And as he makes his way up here too, I'm going to go out and find out what's happened to the wine that we have for prizes as well. And we needed to announce that in, is it over there, is it? Just sitting by itself. Fabulous. All right, well, we'll figure out how to divvy that up in a minute. I don't know if it'll go through 60 of us. Like the way you got your eyes on it there as you came through, Paul. So Medallion is a rapidly growing gold and copper resources. They are located at the Ravensthorpe Gold Project, which is in southern WA. They listed back in 2021, and since then, Paul and his team have completed 54 kilometres of drilling, and they've expanded their resources to 1.6 million ounces gold equivalent He's going to tell us about a very golden future in Ravensthorpe. Would you please make him welcome, everyone?
Thank you, Chrissy. This is my third year presenting at the Gold Coast Investment Showcase. So it's great to be back. Thanks to the organisers and the sponsors and everyone who's in attendance here to hear the Medallion story. We are an advanced gold and copper explorer. We've got a portfolio of assets with great potential in the southern goldfields of WA. Now, we've grown resources at that project to 1.6 million ounces gold equivalent, and it's our ambition now to progress from explorer to developer and on to producer. I'm going to talk to you today about what the Medallion team's been doing to make that ambition reality. The presentation is lodged with ASX. It's a general update. It's not an offer or advice. So, junior gold resources, junior gold equities. It is a tough and crowded space, and it has been for a period of time now. We are competing for capital. We're competing for attention with a host of other explorers, and I think these points, when they're taken together, are what separate us from much of the competition. First and foremost is that we control the majority of the Greenstone Belt in Western Australia that has been proven to be fertile for gold and for copper. These assets are increasingly rare, and I'm confident that this one will demonstrate itself to be extremely valuable. The location's outstanding. There are 2 major resource projects underway in the local government area. It demonstrates that Ravensthorpe is an enabling jurisdiction for what we've got in mind. We've got scale, we've got grade, 1.6 million ounces at 2.6 grams. That deposit is shallowly drilled. It's open in multiple directions. It can, and it is being grown as we continue to invest in it. The asset's de-risked. We're on granted mining leases. We are clear from a heritage perspective. We've advanced the permit substantially. We've got a PFS underway to demonstrate the technical and the commercial merits of the asset. We're extremely active on the ground, 54 kilometres drilled thus far. We think a lot more to come. We've invested over 80% of all of the money that we've raised through the raisings over the journey into the ground, into increasing the value of those assets for our shareholders. And all of that is being done with the strategic objective of establishing that critical mass of metal to build a mine. Now, internally, we think that critical mass is between 800 and 900,000 ounces gold equivalent in the mine plan. That gives us the opportunity to target that 100,000 ounce per annum run rate for a minimum of 8 years. We think that's a bankable project in WA. In this market, we're very confident that the Kundit Mining Centre can yield that critical mass, and then the near mine and the regional exploration opportunity is just upside from there. Touching on corporate, 230 million shares out. In March, we showed a cash balance of $1.6 million. We've got a loan to our major shareholder. It's only repayable in the case of the change of control event, or if we make a decision to build the mine at Ravensthorpe. And there's an investment in our neighbours nickel search. On Friday, we had a market capitalisation of $18 million. If you adjust for the cash, the debt, the listed investment, that backs out an enterprise value of $20 million. And based on our current resource, that's a $12 an ounce valuation. That's a steal given the quality of those ounces. In terms of leadership, those names will be well known to people who know the resources sector in WA. John, the chair, long-term prominent board member of Northern Star. He's also been the chair of a number of success stories at the junior end as well. Tony heading up Galena, you heard from him yesterday. He's built 4 mines. He's about to complete his 5th at Abra. Those guys are at the forefront of the industry, the forefront of capital markets. It's a great overlay for a young, capable, hungry senior management team that's driving the growth at the assets. Coming back to valuation, we comp very well with our peers. Now, this peer group is ASX listed explorers whose principal asset is gold in Western Australia at a pre-production stage. Now, we screen very well in terms of scale. We screen very well in terms of grade. On the face of it, it appears that we're located at the wrong end of this curve. Now, it's been that way for some period of time. It's extremely frustrating. But there's no point in whinging about it or complaining about it. All we can do is remain focused on de-risking and growing those resources. And I think as we continue to do that, continue to demonstrate that those resources can be commercialised, we begin to move to the left of that curve. Now, of course, I'd say that he's talking his own book, you might say. Well, that might be the case. However, there are two analysts that are covering us from brokerage houses. The consensus price target on Medallion's 48 cents. That would imply an enterprise value per resource ounce of $70. Even if they're half right, Medallion looks compelling from a valuation point of view. Focusing in on the Ravensthorpe Gold Project, the flagship asset, Medallion has the dominant land holding in the Phillips River mineral field. And critical to that are the tenements that straddle the Annabelle Volcanics, which are mapped in yellow on this slide. Now, it's these rocks that have hosted all of the historic production and are host to all of the known resources and all of the known prospects. They're also host to the pegmatites that Allkem are mining at Mount Catlin. Now, there's been approximately 130,000 ounces of gold, 20,000 tonnes of copper metal produced from this area over the journey. It's come from 3 clusters of mines at Ravensthorpe in the north, down at Desmond Elverton on the southeastern flank of the belt, which was incidentally WA's largest copper producer until Telfer came along. And then at the Cundipp Mining Centre at the southern end of the field, where the Archean dips beneath the Proterozoic and continues on to the south. Now, interestingly, of that historic production in today's prices, gross metal value, it's a roughly 50-50 split between the gold and the copper. And we think copper is going to have an increasingly important role to play in the Medallion story as it unfolds. We're certainly seeing that in the drilling at depth at Cundipp. Now, it's at Cundipp that the bulk of the activity has gone on. This is where the bulk of the expenditure, the bulk of the drilling's taken place, and it's where the bulk of the resource growth has come from. We've managed to get 80% of the funds that we've raised directly into these assets since we listed, and that's what you'll get with Medallion, dollars into the ground and high-grade resource growth. Little bit of a history lesson. This is a chart of the historic drilling that's taken place on our Ravensthorpe tenements over the last 45 years. As you can see, sporadic levels of activity and relatively low levels of activity when something did happen. Now, the reason for this was fragmented ownership in the early part of the time series. But even when the tenements were amalgamated, the assets have suffered because of competing corporate priorities within the former owners. And it hasn't been until Medallion came along that the requisite focus and attention was brought to bear on these assets. 54 kilometres drilled so far since we listed, and we expect a lot more to follow. Also interesting is that even when Medallion's been involved, it's been Cundipp that's getting all the attention. The regional drilling's in the yellow shades there. Cundipp comprises 2.5 kilometres of the prospective stratigraphy, of the 40 kilometres of prospective stratigraphy that we currently control. Now, while capital markets are tight, it's hard for us to get out and chase that broader regional opportunity. But if things change, that the opportunity is not going anywhere at some point in time, if things change, we'll change that and get after those earlier stage, higher impact targets. But for the time being, the focus really is on de-risking and growing the resources at Cundipp. And we're getting some runs on the board in that regard. Focusing in on the Cundipp Mining Centre itself, this is not your typical WA gold deposit. And most obviously the difference there is that we've got a significant copper credit. It's also got slightly different host rocks, slightly different deposit chemistry, and all of those things are related. But Cundipp's a strongly mineralised, multi-deposit, medium-grade gold and copper system. It occurs in multiple orientations. The grade variability is very low. The gold domains have low CVs. That means minimal top cutting. We've got consistent widths, consistent grades. When you read Medallion's announcements, you don't see bonanza gold grades, but what you do see is consistent widths, consistent grades, 2, 3, 4, 5 metres at 4, 5, 6, 7, 8 grams. We think that leads to a lower risk resource estimate, and then by direct extension, a lower risk mine plan. Now, there's multiple opportunities to grow the resource within this mining lease boundary that's shown on the screen. The average depth of drilling here at the moment is 100 metres below surface. The deepest hole we have into the system is 370 metres below surface. The ounce per vertical metre profile here averages 4,000. And we're adding resources both along strike and at depth. Now, if we could maintain an ounce per vertical metre profile of 5,000 from surface to a depth of 500 metres, which is still shallow for an Archean gold lode, then this area gets really interesting in terms of its scale and significance. There's also opportunities to find additional lodes within the tenement boundary. Those lodes are projected to intersect at depth and in some cases along strike. There's remnant Proterozoic cover here, which is obscured, and there's been an insufficient amount of work done on those areas of the tenement. And we also know there's gold in the bounding tonalite. So there's multiple opportunities here, all within a 1.5 kilometre radius of where you might locate a processing plant to treat the existing resources. It's a great address. It's got great potential. We think multi-million ounce potential over time. That's the sizzle. This is the steak. We updated the resource in February last year. It was based on 44 kilometres of new drilling that we've done. The gold now stands at 1.3 million ounces at 2.1 grams. The copper's now at 59,000 tonnes at 0.3. Combined, that's 1.6 million ounces on a gold equivalent basis. We've over doubled the metal inventory since we got going in March of 2021. There's a high degree of confidence in those resources, 63% in the indicated category, 3/4 of the resources within 150 metres of surface, so potentially available for open pit mining. Pleasingly, the grades are holding up. So as we continue to drill, open pit gold grades are 1.8 grams, underground 4 grams, plus a significant copper credit. The gold drives the project economics here, the copper enhances it. Every metre that we drilled yielded 20 ounces into that resource upgrade, and we discovered those ounces for roughly $15 an ounce. Now, that was a great business when we were valued at $30 an ounce. You could find them for 15 and have them valued at 30, but that's no longer the case. It's starting to get harder, and it's one of the reasons why we made the decision to start focusing on de-risking those ounces and running the pre-feasibility study. That's the quantity of the ounces. What about the quality of them? We think that the project value, and then by direct extension, the company's value is massively leveraged to increases in the resource that lead to increases in the mine plan. So that means finding economic ounces. That's a long section through the Kundip resource, looking to the west over the 2.5 kilometres as we currently understand it. The indicated's in the blue, the inferred's in the grey. Now, once that resource was updated, we were interested in what proportion of it would convert to a mine plan. So we undertook conservative open pit and underground optimizations to understand that. The results are shown at the bottom of the slide. I'd stress this isn't a reserve. This is just a diluted subset of the existing resource. But what we were seeing was roughly 3/4 of the metal reporting into those mineable shapes. Of that, approximately 60% of it is in the indicated category. The strip ratios are there at about 8:1, so moderate in the pits. And the underground and the open pit gold grades are holding up. So that's given us great confidence. We're seeing geometric grade continuity. These ore bodies can withstand the dilution that they'll inevitably confront when we come to mine them. I need to get my skates on. So where have we been? Where are we at? Where are we going to? We've been extremely busy. We've drilled 54 kilometres since we got going in March of 2021. That gave us a lot of momentum, a lot of news flow. It led to a lot of resource growth. So there's a PFS now well underway to determine the technical and the commercial merits of that resource. It'll be reported in the September quarter. And then that'll generate a lot of information for us, a lot of outcomes, but principally we'll see what the size of the economic pie is, or prize is at Kundip. And we'll also have parameters with which to go back and re-engage with regulators. Our existing permit conceived a much smaller project. It's grown substantially. We've now got a much larger footprint. We need to re-engage with regulators and amend that permit. There's also other activities that we need to perform as we move towards DFS and then final investment decision, infill drilling, metallurgical test work, and various other bits and pieces. But 2023 into 2024 is all about really optimising the preferred development pathway for Kundip, growing and de-risking those resources that are there. So to wrap this up, we think it's a compelling opportunity for investors who are looking for advanced exposure to advanced gold and copper exploration in WA. This business is well run. It's attractively priced relative to its peers. We own assets with great potential in a great jurisdiction. That resource, it continues to grow as we continue to invest in it. The regional exploration opportunity, it's real, it's extensive. We may not test it in the short term, but it's not going anywhere. It represents tremendous upside. So if you haven't done so already, I'd recommend take a closer look at Medallion. check out the website, get on the mailing list, follow us on social media, call us directly, arrange a meeting. We're always happy to talk about what's unfolding at Ravy. Thank you, and thank you, Chrissy.
Right on, Paul. I've got a new little formula for next year. So what I'm going to do at 15 minutes is Shane's just going to pull the microphone out. Keith actually offered to build me a ejection seat. Where are you, Keith? You still here? Okay, Keith's the process engineer. He said, I'll make a process for you, Chrissy, to make sure they all finish at 15 minutes. The problem is, like Paul, you guys all have such interesting things to say. Now, one last company, one final investment opportunity for Gold Coast 2023. And this fellow's actually brought some wine to give away to one of you at the end of his presentation as well. If that's, the heads just went up straight in the middle there, Ben. Red wine it is too. Nice red wine. Okay. So Rob Murdoch is going to be our final speaker. He's up the back of the room there. He's been making observations all day and all of his life, but he's got some sage observations to pass on to us. But before he does that, this mob is on stage. So Tombador Iron Ltd. And in Rob's word, he said they're a tidy little operation, iron mob in Brazil, a tidy little iron mob in Brazil. They are, in fact, the producers of the highest quality iron ore lump in the world. This is Stephen Quantrill. He is their ED. And he was, you were telling me before, there are a lot of operators that come out of Brazil and they come up very badly battle scarred. You've come out with no scars on. In fact, you've nailed everything you've set out to do in your vision. You've built your operation in the 9 months and you've got numerous offtake agreements. So it could well be the final investment opportunity that you were looking for in 2023 here at Gold Coast. Would you please make him welcome, everyone? And then remember the wine.
Yeah. Thank you, Chrissy, and thanks to Vertical Events, and importantly, thank you for your attendance hanging in here for the final speech for Rob's. So I want to talk today about Tombador Iron and our journey. It's a Brazilian success story, as Chrissy has introduced. You know, there've been a lot of people who've gone to Brazil and come up with difficulty, but we've had a very good run, touch wood. We produce Brazil's highest quality lump. And according to Trafigura, who's our offtake partner and our marketing partner, it's the world's highest quality lump. So we've been very proud of our success. Just going to our journey. So we own the project 100%. Tombador is, we're in Bahia in the northeast of Brazil. So Bahia is the state immediately north of Minas Gerais, which is the main traditional mining area of Brazil. So effectively, this is a new iron ore mining province. We own the project 100%. We listed the project in October of 2020, and in a 9-month period, we constructed the project, completed all our permitting, and went into our first production of iron ore in May of 2021, and had our first export shipment in July of 2021. Since then, we've had a successful run with exports. We've opened up export market both into Europe and into Asia, and we've recently secured a number of domestic offtake arrangements with Brazilian steel mills. We formalized 3 of those. We have been supplying 5 steel mills in Brazil. And importantly, when we set up the project, it was always designed from a shareholder point of view to return cash to shareholders, and we were very pleased to pay our first dividend in October of last year, so within 18 months of starting operations. So our mining operation is very simple, straightforward mining operation. It's an open cut mine with just a drill blast, excavate, and short haul down the hill to our ROM. We crush on site. We're producing lump and fines, and then that material is stockpiled, and we haul in these vehicles you can see on the screen there, the 50-ton vehicle units. The thousands and thousands of these trucks available in Brazil. They haul both agricultural product and iron ore. And so there's very high availability and a very good road network. We only have a very short section of unsealed road between ourselves and between the mine and the nearest sealed road, about 30 kilometers. And then from there, it's paved all the way to 2 ports. Actually, I'll just go back to point that out. So we have the two ports that you can see, 2 port routes to TMIB, which is in Sergipe. In Sergipe, which is due east, and the alternative is to come down to Salvador, where we've just recently started going through the Enseada port. So we've, over the ensuing quarters, we have stockpiled quite a lot of material. We're up at over 500,000 tonnes of stockpiled material at the end of March quarter of 2023. And we've had a run of producing. At the end of March, we were at 1.4 million tonnes produced. We've subsequently gone to 1.5 million tonnes produced. But we have taken a view as a board and as a company that we'll only sell where we can make positive margins. So, although we produce, we vary our production to suit the sales profile. In the March quarter was our first time in which sales exceeded production. But when we set out, we targeted to produce up to 1 million tonnes a year, and we've comfortably proved that we can do that. We've had months of up to 100,000 tonnes produced in a single month. We typically like to hold a minimum production level of 50,000 tonnes a month or 150,000 tonnes a quarter, and then we can vary up from there using our stockpile as a buffer. Really importantly for our sales success and the success of the project has been the outstanding grade of the product. So both our fines and our lump are 65% premium product with silica sub 3% and alumina around 0.5%. And importantly, moisture is extremely low. So we've got sub 3% moisture in our fines and sub 1% in our lump. So the product has excellent grade and chemistry and is a very hard lump, which is quite unusual for a lot of Brazilian lumps tend to be softer and they degrade in the transportation process. But our lump has proved to be extremely hard and resilient. We get extremely close correlation between the results we see at the mine and what we see at the final customer delivery. So this, and combined with the fact that we have no seasonality, so we're in a low rainfall area. A lot of people think of Brazil as a high rainfall area, but we are in Brazil is a low rainfall area, which means that we have minimal disruption through weather events. And that reliability and lack of seasonality has made us popular with the local steel mills who want steady production and steady delivery right through the year. As I mentioned, we have sold over 1 million. Well, we sold over 1 million tonnes to 15th of May 2023. So we announced that last month. And in our March quarter was our largest quarter of sales to date, 186,000 tonnes. And as I said a moment ago, we've been managing our sales volumes to meet production to meet sales. So we have been maintaining a base level of 150,000 tonnes a quarter, and then ramping that up as sales grow. And importantly, in the last quarter was the first time we exported. We had an opportunity to export via the Enseada port, which is near Salvador. And that has allowed us to take vessels of 45,000 tonnes to 50,000 tonnes, so the Supramax size. Whereas in the prior, going through TMIB, which is in Sergipe, we have a limit of about 36,000 tonnes. And that 36,000 tonne limit Handymax size vessel suits a lot of ports in Europe very well, particularly in the eastern part of Europe. So that's actually been a big advantage for us to be able to sell that size shipment into those markets. And now with the larger 45 to 50,000 tonne vessels, we've been successfully running to Asia. So with a combination of the Asian market and the European market and the domestic market, we sort of got all bases covered. So from a foundation point of view, we've actually put ourselves on a really strong foundation for this project. So this is just a slide on the development of the Enseada port and the shipments through that port with up to 50,000 tonne vessels. And the larger vessel allows for cheaper or lower ocean freight rates, which has given us that access to the Asian market. So we've got that flexibility. On the domestic side, if you've been following our story, you would have seen that we have announced in the last month or so 3 contracts with tier 1 steel mills, Usiminas, ArcelorMittal, and Aperam. So those 3 mills are now taking steady volumes of lump and fines. And so it's taken us some time to get those markets established because those mills go through a process of testing your product, ensuring that it your standard of delivery and your consistency is good. And they run from a series of trials, they scale up their trials, and then they finally commit to volumes. So we have committed those volumes now for regular supply. And we'll continue to develop the local market. The local market offers us advantages in that the product is picked up at the mine gate. A lot of the product is picked up at the mine gate, and we issue an invoice the second the truck leaves the site, and we get paid 30 days later. On ESG, we are dry processing. This is a direct shipping ore operation, so there's no water involved. We have no tailings. So that tailings is a sensitive area in iron ore in lots of parts of the world, including Brazil. And that dry processing has allowed us has definitely assisted with our permitting and the simplicity of our operation. The high-grade iron ore is in high demand because of the prevailing sentiment around green and reducing energy consumption. Lump is the greenest direct shipping ore because it can go directly into the blast furnace with no additional processing. We're supplying 65% product into both lump and fines. Clearly, we focus on safety at work. We've got an excellent safety record. We focus on making sure that our roads are serviced, and we take care of dust suppression. We take a lot of care with our interaction with the local community, and both inviting the community into the mine for demonstration of the mine, and also to show what we're doing to manage the environmental aspects responsibly. And that includes going into schools and other parts of the community. So it's a very active engagement. The nearest community, large settlement is Centre Say, which is about 30 kilometres from the mine. There's about 10,000 people there. So we've got a good relationship with that, and we've become a significant part of the local economy. Importantly, we qualified for what's called the Sardine scheme in northeast of Brazil. That allowed us to enjoy a 75% reduction in our income tax rate. So that reduces the corporate tax rate or income tax rate paid by Tombador from about 34%, which is the normal corporate rate, to under 16%. So that's been a major benefit for the profitability of the project. As far as financial performance goes, just draw attention to the stockpiling. As at the end of the March quarter, we had $14 million worth of material sitting in stockpile at cost, and cash on hand of $15 million. So if you put that in the context of our market cap, which I'll touch on in a second, you'll see that there's a lot of value inherent, locked in the project that's available for release. So in the current quarter, we have been selling down our current stockpiles. We've been using that as a buffer between our production rate and our sales rate. And the fact that we've now got these steady sales into the domestic market, combined with access to both Europe and Asia, provides us a very nice spread of risk management for the project, and a good foundation for continuing revenue. So just touching on the board, so good combination of skills, very balanced board. So Anna's our chairman. Her skills are mainly, she's been working for the last 15 to 20 years in the resources industry, and brings mainly the sort of the corporate governance and financial skills to the board. Keith's a metallurgist, a metallurgical engineer. He's very deeply experienced in both founding and growing companies. Dave Chapman brings the geological expertise to the board. And then Abby is here with me as our CFO and COSEC. And Gabriel and his team in Brazil have done an amazing job. So Gabriel's our CEO. And he and our team in Brazil, we're extremely proud of their performance in getting this project built through the COVID period. As I said, we listed in October 20. We built and started production in May 21. So quite a stressful time in Brazil, in world markets, and I think a huge accomplishment to the whole team. And then just touching on our market cap, so we've been capitalized. Our market cap sitting in the mid 40 millions. As I said, we've got as at March, we had $14 million of inventory at cost and $15 million of cash on the balance sheet. So I think you can see pretty good opportunity to see that value go up. Our top holders, It's close to half the companies owned by Colony Singapore and Macrae Investments. Essentially, that's one group. I wear a couple of hats. I also represent the major shareholding group. I chair Macrae Investments. So it's the Clough family, effectively the Clough family office, and so we're the major shareholders sitting behind the company. We're the founding shareholding group, and we brought it to market. So that's us. Hopefully that's spot on time.
It is, Stefan, absolutely perfect. And hold on one second. We've got this beautiful bottle of wine, which has come from your actual cellar. Tell us about it.
We thought we'd recognise your longevity and staying to see the end of the project. Brazil doesn't make a lot of wine, so we've got a nice Australian wine to thank someone in the audience, or to gift someone in the audience. What do you want to do?
Well, I was almost going to give it to this poor man here, because I think you've been sitting next to those three naughty boys for so long, and they've been so badly behaved, and you are the last man standing. I really feel for you. Can you tell me when the next vertical event is on here? What's the name of the next vertical events being held here? No, shush up. And you can go out. That's Jackson, everyone who organised. What was it? Yeah, okay, it was Techno. And when are you coming for it? It is on the... Go on, Jackson. When's it on? You can work that one? Oh. Right, okay, fantastic. I'd like to make it easy. Thank you very much. Would you like to go and give it to that gentleman over there? Just let me grab his name while I'm over here. What was your name, sir? Long-suffering human of the other humans.
Charles Dixon.
Charles, you were the best behaved one. Good. Don't show it to him, you take it back. And thanks so much, Stephen, for doing that. That's an absolutely lovely gesture.
You're welcome. Cheers.
All right, behind me, choking out the bit, is oh man, God, he's an amazing human being, this man behind me. Do you know he started his career back in, 1971? 1971, earth scientist. What a great qualification to graduate with. And then in about 2015, he thought, oh, bugger it, I'll retire. And then he was like, no. And this glossy little website popped up, Austex Resource Opportunities. And every morning in the mailbox of subscribers comes this nice little thing. It's called the Austex Daily. It's only for subscribers, and it's the only totally independent technical review and guidance available on ASX resource project status. This is what your mignon said. That's what you've told me and what I've heard many times. I want to make sure it's correct, but it's the only one. So every morning there's usually about 40 announcements, isn't there? And you go through them all and you give your thoughts on it. This is the brains behind it. You've got one of those brains that won't stop. I'm going to get off so he can talk to you more. Would you please welcome to round out Gold Coast 2023, the fantastic Mr. Robert Murdoch.
Well, thanks very much, Chrissy, for that. And thanks very much to Jackson and Stewie and the team at Vertical Events for putting on this great show. I think it's been probably the best one yet. So well done. Congratulations. And congratulations to all the companies that came along and presented and were part of the show. And thanks very much for the audience and the people that came along to listen more about our wonderful resource industry, because that's what we're all about. We put out a report every morning that looks at all the projects, announcements, and we provide a short summary, key facts. Our reports are really focused towards the... Oh, I need that, do I? Okay. Our reports are focused towards resource industry professionals, and we send that out to over 500 subscribers around the world. And we also supplement that at the weekend with a review of looking at the changes in commodity and ASX share prices. So what's happened to the resource market over the last couple of years? It's gone up and down as the markets tend to do. We had peaks in July 21, May 22 and January 23. They're about 9 months ahead. So what's that mean for quarter 4, 23? Will we go up again? If you have a look right at the end, there's a little tick up. In fact, we'll have a look at that in a little bit more detail. There's on the left-hand side, the average share prices from the 27th of January when we had our last peak down to the 29th of May. And since then, over the last 3 weeks, the resources sector have moved up. The share prices have moved up on it over that period, and it's provided a period of short-term opportunity. Now, what's happened with the companies? We had a real spate of IPOs in 2021 and 2022. That's virtually dried up. There's a few coming out, smattering, but if you've got a new project out there and you're looking for a home for it, you've really got to look at some of the companies that are You know, in what we call the fourth quartile of the market, which is a market cap under about $8 million and less than $1 million in the bank, and they're around. We'll have a look at some of those later on. What's happened with capital raisings over the COVID period? Of course, we had some massive raisings on the ASX, up around $3 billion a quarter in Q4 21. It dropped down in the last quarter to back to what I would call pre-COVID levels. So it's come down. It's harder to raise cash, but it's not impossible to raise cash, and good projects are raising cash. The number of companies is there on the left-hand side. If you want to see this in detail, you really got to send me an email and I'll send it to you, because you're not going to have time, unfortunately, to go through this. But if you look on the right-hand one, it's the average Q1 23 raisings. And a massive amount of money was raised by the heavy mineral sands projects, because all of a sudden they woke up that there's rare earth value in those monazite. And if any of you have come up from down south, across the border there, I can tell you, when I was a young geo, the people mining mineral sands down there were putting the monazite back under what is now your house. It's radioactive. And other commodities have raised money: hydrogen and helium gas, graphite and lithium, and rare earths, to a lesser extent gold. So they're the commodities that people have been putting money into and raising money. Brokers have been prepared to go to town and raise that money for companies in the last quarter. If you look then at the average cash that the companies hold in each of our sectors of the market, the uranium companies are well cashed up, which is good because uranium's had a fantastic 12 months. Graphite companies, lithium companies, heavy mineral sands, fertilizers. There's a lot of interest in phosphates and things like that at the moment, and rare earths. That's where the money is. That's where people are spending the money. And you'll notice that all the time at the moment, where announcements coming out where people are taking on new projects in those sectors. It's where the excitement is at the moment. If you look at exploration expenditure, yes, that's come back as well from the COVID level. During COVID, our ASX companies, resource companies were spending about $1 billion on exploration. It came back in the first quarter to a little bit lower. I mean, first quarter is always lower because there's less field work going on, but it did come down a little bit from the previous year. So we're not raising as much money, still a lot of exploration going on. What does that mean? It means a little bit less cash in the bank. So where was the action? If we look at these graphs, which come out last weekend in the light, if we look at commodity prices over the last week, the commodities that moved were gas, uranium, nickel, lithium carbonate, and lead. And if you'll see then a trend where in the following week, there'll be a little bit of a rush and uptick on projects in those areas. If you look at the share prices, forget about bauxite, there's only a very small number of companies in there, but iron ore reflected the fact that we've had iron ore prices moving up of recent time. It's up 4% last week. So iron ore companies moved up 7.7. There's been reasonable interest in that. And we picked that about for our readers about a month ago to look at the iron ore players. Lithium has been fantastic. There's so much interest in lithium. It's one of the main games in town. Uranium is starting to come on in everyone's thoughts, particularly around the world and here in Australia. If you notice, there's been a lot more talk about nuclear energy of recent time. So there's more interest now in uranium, and we're seeing a number of companies that had to stop operations when the price went down. There's about 4 of them all restarting over in the next year or so of those projects. So have a look at those, and your nickel projects as well, and copper. Over the last week, if you look over the last year, rare earths right down the bottom, they dropped down last week, but they're still up 19%. The reason for that has been a lot of interest in rare earths as a critical mineral. The trouble is there's rare earths and there's rare earths. So there's some that are easy to metallurgically to extract the various minerals from, and there's some that are a lot harder. And so I think the market's starting to realise that there are differences in those particular commodities. If looking at the resource market on a quartile range, each of those quartiles, this is by market cap. So 25% of the ASX companies are over 75 million market cap. And then it goes down to the fourth quarter where a quarter of the companies have less than 8 million market cap. You see how the share prices vary there. If you look over the last 12 months, the first quartile are up 39%. The second are down 4%, third are down 20%, and the fourth quartile down 38%. So if you're a conservative investor out there, I usually recommend try and stick up around the first or second quartile. Of course, there are companies that are moving up all the time from the fourth quartile to the third quartile, and they will be coming up all the time. We'll have a look at that in a little while. This is an interesting slide. Okay, so we get a lot of, you get a lot of excitement out there generated by organisations like Hot Copper and other brokers who are telling you, get into this thing and it flies. So we have a look at the top stock each week, the company that moved up the most. And the dates are there on the left of when they did that. And over in the third column is what's happened to their price since then. You can see that all those that were the best, the fastest rising stock, right up to the end of February have now come back at least 40%. So don't be carried away by speculation in the marketplace. You've got to look at quality of projects. That's what it's all about, the quality of projects. And they've got to stack up for you. You'll see in there, this very rare, on the far column, I've got the list of the quartile that they're in. And you can see that the one company that was in the first quartile on the 3rd of March, it was the best moving stock, has moved up another 63% since. One in the second quartile in the 24th of March moved up 41%. Gold. We'd almost forgotten it, hadn't we? But it has had a good year. If we looked at it, the companies that have moved out of that fourth quartile, these are the ones that, if you were lucky enough to get on, you've done very well. They've moved up this year. On the percentages there highlighted in blue that they've moved over the year, and what was the turning point is in the far right-hand column. What was it that moved their share price up? A lot of it is rare earths, a lot of it is lithium, and in particularly lithium. James Bay, mate, it's more exciting than living on the Gold Coast and next to Clive Palmer, in that area there. James Bay, everyone wants to go there. So there's still companies stuck in the fourth quartile. So if you've got a good project out there, these are the companies you need to be talking to. And I haven't put their name there because I don't want to embarrass them. It's just ABC. But if you send me an email, I'll send you a list of who they are. But these are the companies that have had market caps less than $8 million all year. The share prices continue to move down, some of them as far as 80%, some of them are 40%. They need to change. They need a new project. Probably they need new management. They need a new direction. And 13 of those projects are in gold, 5 are in copper, 2 are in nickel and zinc, 1 in oil and gas and 1 in lithium. So these are shells. So they are around, and this is probably better than an IPO now if you've got a project. Go talk to them. Now, I put this in. This is the sort of typical slide about how the share prices move as you move through the various stages. And of course, the exploration sweet spot is where investors ought to be, because this is where, starting off of drilling and moving through the drilling, coming up with good drilling results. If you get a company riding up that, you'll do very well. It gets up to feasibility. Then it gets into permitting and finance. Oh, dear. Have you noticed it's getting longer and longer and longer to get permitting through? It's getting harder and harder to get project financing. The market loses interest, and you probably have to take a profit and move out and then wait till that company comes back, has a successful commissioning of their plant and gets it up to where it's achieving nameplates and projected revenues. So be wary of that. Pop out before they go down towards looking at permitting, and because that is getting harder and it ain't going to get any better. Look at the best and worst performers over the last 6 months from the first quartile. This is going back to where I said for conservative investors, the first quartile is the place to be. So, we've had spectacular stuff. MEI over in Brazil on rare earths up 545%. It's 5-bagger. So it's a great one if you're on it. But if you have a look, the top 20 does include 7 golds. That's great. And a lot of those are gold producers such as RSG, WGX, EMR, and yeah, so there's quite a few there that are gold producers. They're good, steady companies, and they've done very well this year. There are 7 that are lithium companies, and 3 rare earths, and 1 copper, uranium, and heavy mineral sand. So the companies on that side have done very well, gold producers, and in particular, and then also explorers in rare earths and lithium. On the other side of the market, on the bottom of the market, the poor old coal industry has been hammered, particularly here in Queensland, where they think it's the fatted pig it's going to have all the, you know, taken the money to balance the budgets in the government and make sure that there's money for schools and whatever else. But yeah, the government has to be very careful there, because absolutely have cheesed off the hydrocarbon industries, and we're going to need them for a long, long time yet. And of course, hydrocarbons are about the only thing that'll keep Queensland going to the extent paying the bills to the level that mining royalties are right now. So we have to find a way to keep them going for Queensland. Rare earth and lithium's were some of those that moved down, and some of the other commodities there. Gold. Now we're going to look now at the commodities and where I think they're going to go. Okay, I put up a slide very quickly on the gold producers first quarter 23 production, and looking at the gold price. It's currently around 2,800 Australian, and we've had some in trouble. NML in recent days have called in the receivers, and there's a few others there that are in trouble, anything over about 2,500. But there's a lot of companies at the top of the list there that have got very low gold price, got lots of money, and look to them to buy up Western Australian explorers. So that's where, if you're interested in gold, look at the Western Australian companies that have got resources, because they're in the frame to be bought up, and you'll probably get a 50% or 100% hit on your money if you do. And here's some of the, as I said, cash is king. And here's some of the gold, silver players, not around. They're not producers, but they've got a lot of money. De Grey, absolutely outstanding. And if you saw the announcement today, they're going to join forces with Nova and extend their exploration over that way. So Genesis have just got permission to do their purchasing of St Barbara's Leonora assets. I'm not quite sure why they would want the old Waller mine, but anyway, that's up to them. Bellevue are in construction. So there's quite a number of good little companies there in the gold space going down. Musgrave, West Gold has just made an offer for them. And recently Breaker was taken over by Ramelius. So lots of action, particularly in Western Australia on golds. That's the place to be for you. Now, over the 12 months, we've had the lithium and neodymium price move down. It started to move up. So there's interest back in lithium and rare earths. And if we look at the lithium companies by region, the top region by number, Western Australia, and then followed by Canada. But average share price year to date, Canadians have just gone crackers. Now, my friends in Canada tell me that the Aussies are buying out stuff that we've had a look at over here and we don't want. And that typically happens between both markets. But there's a lot of companies going over there. There's a lot of believers in the Canadian story. I wish them luck. But I'll tell you what, the big boys are seriously looking in Western Australian lithium. So again, have a look at your lithium explorers that have got some interest, because big companies are moving in on their share registry. We saw an announcement just recently with Albemarle, are prepared to pay $30 million for the ground north of Greenbushes mine to an explorer. Rare earths, well, Western Australian dominates, because you basically need Archean, ultramafics and mafic rocks over all the areas. But where the share price change has been the best results been the few that are over in Africa, particularly LIN, which is in Malawi. That's a fantastic deposit. Dreadnought here have a great project in WA, and there's a few others around as well. So it's, again, selective, and probably I would prefer the hard rock deposits, the carbonatites and things like that, that have got a bit of scale over the clay deposits. rare earths and lithium companies that have got a lot of money are listed there. And if you get in touch with me, I can send you a copy of it. Just wanted to touch on the other commodities that I think are good for the rest of the year: uranium, nickel, the platinum group, copper and iron ore. Copper's been an underperformer. I think it's got to have its day in the sun soon. So there's again opportunities in there for you, but don't forget the old commodities, coal, oil and gas, because they're the A team that do the heavy lifting for the world. And the people want a quick shift very quickly to the C team, but you just can't do it overnight. And governments have made the huge mistake of trying to do it too fast. It'll happen, but it's not going to happen quickly. So there's opportunities there as well. So thank you very much, Christy. Thank you for Vertical Events, and thank you all for staying back. And I'm glad someone here is to help me turn the lights off.
Thank you. That was a great way to finish. Thank you, Robert. I just want to draw your attention to a few things you're talking about, some stocks. I wanted to draw everyone's attention to some of the guys that have presented here over the years, and one of them would be Azure, because when they presented here last, their share price was 17 cents. Now it's $1.35. Green Tech Metals, they presented here last.
That's been a great success for the boys at Azure just the last couple of days. Tony Rivera and those guys.
So you could have bought in the last couple of days as well.
Well, you should have bought it a few weeks ago, but it has been around for a while. They've got, a Green Tech here.
20 cents this time last year, 60 cents now. Pretty good.
They're companies that would have been on that list.
Good. Go and sit down. Bugger off. Good on you. Do you know the favourite one I think I missed? Do you all remember Resap? Remember Resap? When Brian, yeah. Oh, don't worry. But when Resap got up here and Brian Liebman got up here back, I think it was 2015, 16, it was a while ago, and they listed at 2 cents. So they were your very own Brisbane little university success story. And they said, we can, at bronchitis, all sorts of things, we can have a look at that. And then along came COVID. How much did they sell last year for to Pfizer? $179 million. Who actually listened to Brian in this room? Anyone? Aha, no wonder you're running around like that. Two of you, good. Well, drinks are on you outside because Stu's not putting any more on. And we will see you back here in August for Techno. Andrew will put that email through to you for registration. Hope you enjoyed it. We certainly enjoyed bringing it to you, and we'll see you then. Thanks, everyone. Bye-bye.